Elon's upset because we took the EV mandate. Look, Elon and I had a great relationship. I don't know if we're well anymore, but I'm very disappointed in Elon. I've helped Elon a lot. I don't know what it is. It's sort of Trump derangement syndrome.
In just one afternoon, the world's richest man lost $34 billion. Tesla shareholders? They lost even more. This is the story of how a Twitter feud between two billionaires just wiped out $152 billion in market value, and why this could be just the beginning. Today, we're breaking down the most expensive political feud in Wall Street history. By the end of this video, you'll understand exactly what happened, which sectors are next, and most importantly, how to protect your portfolio from political chaos. The trigger. It started with a spending bill. Elon Musk criticized Trump's government spending on his platform X. Trump fired back, threatening to strip government contracts from all of Musk's companies: Tesla, SpaceX, Starlink, Neuralink, the entire empire. The market reacted fast. Tesla stock plunged massively on Thursday, June 5th, wiping out $152 billion in market cap, the most for any day in the company's 15-year history. That's more than the entire GDP of most countries. In a single day, Tesla shares fell 14% as investors realized that political risk just became Tesla's biggest threat. The personal impact. The tit-for-tat between Musk and Trump didn't just sink Tesla's market cap, it took $34 billion off Musk's personal net worth in one afternoon. But here's what's really scary. This wasn't about Tesla's business fundamentals. This was pure political punishment. Why this matters? 1. Government dependency. Here's what most people don't realize. Musk's empire isn't just dependent on consumers, it's dependent on government contracts. SpaceX has $15 billion in NASA contracts. Starlink provides internet to the military. Tesla benefits from EV tax credits. Trump just threatened all of it. 2. Regulatory risk. Every benefit that was perceived he would have gotten now turns into a potential liability. Ross Gerber from Tesla investor Gerber Kawasaki warns this creates a negative force against Tesla that could trigger more government investigations. 3. Broader market impact. But this isn't just about Tesla. When political risk enters the market, it spreads. Other government-dependent tech companies saw their stocks fall. Clean energy stocks plummeted. Investors suddenly realized that in today's America, your stock price depends as much on politics as profits. 4. Precedent setting. This sets a dangerous precedent. If the president can tank a company's stock with a tweet, what CEO will risk speaking out? What happens to free markets when political loyalty becomes a requirement for business success? So what happens next? Here are 3 scenarios. First, they make peace. If Musk is able to sue for peace and the onus is on him to make peace with Trump, then it'll be a blip in the screen and their bromance will be restored. Tesla recovers, everyone moves on. Second scenario, Trump follows through. Government contracts get canceled. Regulatory pressure increases. Tesla faces an uphill battle that could cost them billions more. This becomes a slow-motion corporate assassination. Third scenario, this spreads into a contagion. Other CEOs get targeted. Political risk becomes the new normal. The entire relationship between business and government changes, and your portfolio pays the price. Recovery signs. Tesla shares recouped some losses on Friday, but a truce appeared uncertain, as White House officials say Trump isn't keen on talking to his former ally. Investment implications. 1. Political risk assessment. For investors, this changes everything. Political risk is now a primary factor in stock valuation. Companies with government exposure are vulnerable. Companies that depend on regulatory approval are at risk. CEOs who speak out politically are playing with shareholder money. Sectors to watch. Defense contractors, clean energy companies, tech firms with government contracts. They're all vulnerable now. But also watch companies that benefit from regulation. If political winds shift, entire industries can get wiped out overnight. Opportunity in chaos. Retail investors seem to have spotted an opportunity in the sudden feud, and were scooping up shares of the electric car maker as they tumbled. Sometimes political sell-offs create buying opportunities, if you can stomach the risk. Portfolio protection. How do you protect yourself? Diversification is key. Don't over-concentrate in politically sensitive sectors. Consider hedging strategies. And maybe most importantly, expect more volatility as politics and markets become increasingly intertwined. Here's what we learned. A single political feud cost shareholders $152 billion. Government dependency is now a major business risk. Political loyalty might become a requirement for corporate success. And this probably isn't the last time we'll see politics destroy shareholder value. Whether Trump and Musk make peace or this escalates, one thing is clear: the rules have changed. In the new economy, your CEO's Twitter account might be more important than your company's balance sheet. What do you think? Will they reconcile? Or is this the beginning of a new era where politics controls profits? Let me know in the comments below, and don't forget to subscribe for more market analysis that cuts through the noise.